You spoke about global equities. Let's just expand on that a little bit more. There is certainly a bit of trepidation, a bit of fear. There's some concerns around global equity valuations. They've been sitting at or near record highs. And clients want to know, is this reflective of solid fundamentals? Or is it, and is it long-term trend? Are we expecting this? Where's our mindset at with our clients and their exposures to globals?
Yep. So, okay. S&P 500 in the US, Australian ASX 200, they are sitting at record prices. They were sitting at record prices a year ago, 5 years ago, 10 years ago. Long-term investment or investing is all about believing in human ingenuity to be able to come up with solutions to problems. The bigger the problem, as an engineer, that's the way I think about things. The bigger the opportunity to come up with challenges. And once those opportunities are realized in solutions, in corporate speak, that leads to earnings.
Absolutely.
And so the notion that just because share prices have hit a record price, they should be sold off, then you're in a hamster kind of a wheel. You're going to go around in circles.
You're not going to
so that's a trader's mindset.
correct.
And so we don't think like that. So what we think about is, what are as I said, the opportunity sets for the corporates to participate in, whether it's climate change, energy transition, which we said, look, if you wanted a gift horse this century, that's the biggest one in terms of the build out of infrastructure, of this thing about energy in the future is actually, energy is the biggest driver of cost base for corporates. You've got to turn the lights on, you've got to run their trucks, you've got to run data centers now these days. If you can get to a point in future where energy becomes more, less costly, I'll put it on record. I think we're going to, after this transition is over, we're going to a world energy is going to be almost negligible cost. If you've got a solar panel on your rooftop, and corporates have got the same, moving in that direction, you're moving into a world of what they call distributive energy production. And so all you need is a case in between, which is called battery. You store it, you got it, you're off the grid.
You use it.
I am.
Yeah.
My energy bill used to be, Zaheer, a lot more than what it is now. It's basically almost zero. So for all intents and purposes, I'm not paying anything. And so I'm usually the last one to catch up on things. I'm an average Joe Blog. So there's
your daughter probably told you all about how to get off the grid and solar power.
Exactly. She's onto EVs, right?
Yeah.
So that's the world we're moving into. So I think and then there's energy transition, then this technology, AI, that's going to reshape societies like internet did, like smartphones did. So all of those things will change ways that we cannot fathom at the moment, and that's okay. We didn't expect China to come into the global export mix and drive down cost of goods. And that led to cheap goods everywhere and huge margins, being extrapolated by global companies, and they did well, and supply chains became very efficient. And so and there will be a new trend in the future. So I think, specifically talking about valuations, we talk about like as if the market has got like it's just one technology factor. Technology stocks are trading at around 28 times PE at the moment, but their earnings are generating, in double-digit returns. These technology stocks don't just sell in local markets. They are few mega sevens, the big ones, and they sell to the world, global population. They don't, for all intents and purposes, don't have, comparable competitors. Their earnings growth is a long track ahead of them. And so they're becoming utilities, right? So they're becoming utilities. So if you have Microsoft and you subscribe to Microsoft's subscription, you're not going to switch it off. So you're going to be a price taker, right? So if you've got Word or Excel, Copilot, or whatever you're subscribing to as part of your business or home, you're locked in, and they're going to pass on the price increases like they did. You read in the papers yesterday.
Yeah.
So these are technology stocks. You've got to think about them more as utilities going forward, and they've got a long kind of a market that they can penetrate and pricing power. And AI is just another factor on top of that. So Australian stocks are trading at 1.13. They have been a little bit higher at the moment. It's at the higher end, but I think we've got enough corporate earnings coming through, particularly with the start of the easing cycle that we're going to see with the interest rates. So what you tend to see is here with valuations. You talked about record prices, higher valuations. What you tend to see with valuations is if you see the business cycles start just at the cusp of expanding, and there's more trust in the future earnings growth, you tend to see valuations get ahead of themselves. So if you believe interest rates are going to be easing, inflation will remain in check, more or less, I think it will remain in check, and consumers will feel more confident in the future to be able to spend, then you are going to get markets being priced a little bit higher, which is what Australian market is showing. US equities are pretty much showing the same thing. Outside of the big tech stocks, US equities are actually not in anything like bubble territory.
No.
So that's kind of the way I'm thinking about bubble outside of equities in tech. They're not there. And as I said, technology is just one of the factors we invest in. There's a lot of other factors we invest in. So we apply the discipline of rebalancing. We've been taking profits in technology stocks for the past year and a half. So yeah, of course, if you're going to buy tech stocks today, you might get a pullback in another 6 months' time or a year's time. But then, that's you bought right at the top on a shorter term basis. So, but we're not doing that.
You're in there for the long play.
Yeah.